TSMC, Taiwan Semiconductor Manufacturing Company Limited, TSMC, a leading contract chip manufacturer globally. Do they represent good value in the AI sphere? It holds dominant market share, especially in high performance computing, that's HPC, making it a key player in the artificial intelligence market. TSMC's core business is expanding with strong growth projected for the rest of 2024. Its stock offers a reasonable price to earnings ratio compared to other AI focused companies, making it an attractive entry potentially into the AI fund at this level. It has a solid market position and it has strong growth trends. TSMC holds nearly 60% of the semiconductor market share, significantly ahead of any competitor. It produces semiconductors used in various industries, including consumer electronics, automotives, data centers, and the Internet of Things. The company's revenue mix is increasingly driven by those HPC products, showing significant year-over-year growth. Demand for artificial intelligence optimized chips is surpassing supply, positioning TSMC for further valuation gains. Market projections and financial performance. Projections suggest significant growth in the AI market, with TSMC well positioned to benefit. The HPC market also expected to expand substantially in the coming years, and despite a slight decline in revenue, TSMC's fourth quarter performance exceeded expectations with strong gross margins. Valuation and growth potential. TSMC offers a comparatively lower price to earnings ratio than other AI players, making it more affordable for you as a trader. Projected earnings per share growth for financial year 2024 and 2025 is very strong, primarily driven by that increased adoption of AI chips. While TSMC's earnings per share growth rate has been lower than competitors such as Nvidia and AMD, its valuation is lower because of this. The company's fair value price to earning ratio suggests significant upside for potential investors compared to those competitors. Risks and financial considerations then. TSMC faces competition and geopolitical challenges in the semiconductor industry, particularly from efforts to develop homegrown chip industries in countries like the US and China. Despite these risks, TSMC remains an attractive and affordable option for investors looking to capitalize on the growth of the AI economy. While it may not grow as rapidly as some competitors, TSMC's lower earnings per share growth expectations are reflected in a more affordable valuation. Overall, the risk-reward profile for TSMC appears to be favorable, with potential for significant upside. The largest chip manufacturer globally, holding dominant market share, especially in high-performance computing, makes this a key player in the AI market. With projections indicating substantial growth in the AI sector, TSMC stands to benefit significantly.
They're not ready. You can't take them yet. They're not ready. It isn't time.
Oh,
Look, get the hell out of here. Go!
Further insights into the potential for entries and risk management, and we'll consider how that performance fundamentally aligns with the strategies and goals of our own AI fund, and leverage this information for the best possible decision making. So now, into those charts. Here are those charts and all those scary numbers. Check it out. We've got so much going on here. Amazingly, we've already looked at TSMC. Ticker is TSM. We talked about it potentially getting into the AI fund back in December 2022, January 2023, start of the year there last year. And it didn't quite make it, despite the fact that we had scoped out this 95% move. The idea behind that was you had your inverted head and shoulders here. The measured move took you to the prior all-time high. We advised caution after that because this prior all-time high was a double top. This could be a cut with handle, and as such, you'd anticipate something in around a 50% retracement, and it's still being bullish subsequent to this move petering out. Could this move peter out? Well, you've got bearish divergence on RSI. You have a diagonal trend line about to break. You've got a horizontal 236 from this most recent fib. If that does take you out, a golden pocket retracement would be slipping below the 236 of the fib that we're using from the low back at the bottom of the inverted head and shoulders to the high that we put in just there now. So if it does break below that 236, you'd go to that 382, which is a golden pocket retracement, and it's the prior high from the formation as the inverted head and shoulders played out. So important levels and bad areas to be cautious of breaking below 135, where you're already very close to, as you can see, 136 on the close this week. If that breaks 123, the next target, then I wouldn't worry too much about 114 long-term. Horizontally, I don't see all that much to look to. There was a period of low liquidity just below that too, so I'd expect price action to go on down and fill this little gap. You see there's been a bad murder on the charts there. See, if you don't know about what a bad murder is, ask Jen in the chat box. Here, this little bit of a gap, golden pocket retracement, looking left 382, healthy chance of a bounce there. You've got earnings on April the 18th. It could be that if you get negative news, that's what you'd look to. It's a very extreme move, but those are the three targets below. If they don't hold, I'd anticipate an 886 retracement, a golden pocket test on this guy. You'd be slipping back into two previous formations, hence where prices have come from since, and I wouldn't be particularly bullish about it at that point, so I wouldn't be catching a knife. I'd be looking for this to provide immediate potential entries with really tight stops, manage your risk, and then I'd be looking to take it to the next high. If it does go up ahead of earnings, we'll be taking it on this. Go first. Next target will be 161, then 169, then 175 on TSM, Taiwan Semiconductor Manufacturing Company. What a lot of data you've got there. If you'd like, I could scope out a couple of potential trade ideas. This would be your golden pocket retracement. Get your tight stop there. You'd have your target up. Probably take that as a really quick trade. Be targeting 135. If it was slightly longer, 156, or those targets, 169. If positive earnings, you'll probably not get that entry, but you could still be taking that target, and then you'd have to be cautious. Below your prior monthly low, it may well be that you're looking for the immediate trade. That starts at 135, 136, very close to where prices are at the minute. And then you'd want a quick tight stop below the prior weekly low, handy there. Again, 169 your target, and you're looking at a 11 to 1 risk reward ratio. Makes it a healthy trade. If none of those work, then you do have potential for an 886, but as I say, it wouldn't be catching the knife. I'd also have a quite tight stop, and I'd have much more reserved targets initially, though the trade could evolve. So that's very interesting on TSM. What else would you like me to look to here on the channel? Just let me know. Any ticker, any asset, anytime. 24/7, you can use those links in the description below to get a video just like this for anything you might be trading. It won't be financial advice, but if it was, it'd be the best financial advice in the world. Remember, I'm Tradespotting, you're Tradespotting. There's lots of wannabes, but there's only one of me. And there is no help in rushing to be rich, and plenty of wealth in waiting to be right. So remember to tune in to Tradespotting, where hopes and dreams meet ends and means. Thanks very much. Hit that like button, subscribe, and if you're a returning viewer, I appreciate you. Thank you very much. See you on the Discord, www.discord.gg/Rocky Outcrop. Join for free today, you lucky thing.
That.
Yep.
Why is it You okay? Just fence off the bad data like I showed you.
Can you see the perimeter?
And bin it. Boom. Fucking refined.
All right, Helly. Hip, hip.
They were scary. The numbers were scary.